Waalaikumsalam warahmatullahi
Waalaikumsalam, sir.
Okay. So, inshallah today, okay, we will continue our discussion on revenue recognition. Okay. And inshallah today the focus is to discuss a bit more on the issue related to material rights. Okay, material rights. I think I think if you look into the discussion by scholar, okay, with the issuance of this new IFRS 15 on revenue recognition from contract with customer, it basically helps better, okay, in terms of providing guidelines for the recognition of material rights. Okay, so inshallah today I will discuss issue on material right a bit more. On Wednesday, as what I have basically mentioned in the Google Classroom, I would like you to do some exercises on material rights. Actually, I would like to have few sessions if you can break up. But when I basically um,
Sorry, sir, you're unmuted.
Sir, you are muted.
uh, sorry, yeah, I already just now put the voice. I don't know. Suddenly it's become muted. Okay, okay. Wait. Okay, so now you can hear my voice.
Yes.
Can.
Okay.
Yes, sir.
So I just briefly says again what I would like to focus today. Today, my focus will be on the material right, a bit more of the discussion on material rights. And then I have also tried to break up you for a smaller tutorial session for you to do exercises. So if you are smaller, then might be easier if you want to ask me. So I will be in the meeting, but you do your discussion on the question. But I think based on your responses, I think most of you still prefer the class hour. So we will see. Okay, we will see whether I can really address all your concern because I think most of the group would still prefer the class hour, except for few groups lah. Except for few groups. We will just do it first on Wednesday. Then we will see how far we have basically achieved the understanding with regards to providing an accounting treatment for material rights. So inshallah today I will go further on the issue of material right. As I said, I basically uh, uh, put forward the discussion on today, the discussion on customer loyalty, issue related to material right, issue related to renewal option, because all of this is basically related to material right. So I have uploaded some notes on material right, which I think might be helpful in order for us to understand, okay, this issue a bit further. Okay, so let me just continue. Okay, let I just continue with these further notes on issue related to material rights. So if you have any question, then please ask question. So inshallah on Wednesday you will do a bit more of exercise. So let let us start on Wednesday some exercises. So we will see how far you have been able to basically understand with regards to accounting treatment for material rights. Okay, so I share the screen. Where is my screen now? It is not here. Wait, Okay. Okay. So actually the document is a bit longer, but I just go into specific section where I think that will help you to understand it more easier with regards to issue of material right. Can you see the document?
No,
Huh? You cannot see the document?
it's black, sir.
Huh? It's black. Why? Ah, I'm not sure also because I can see clearly on my screen here. You see black, yeah?
Yes.
For me, yeah, black.
Uh, what happened?
Maybe you can stop sharing and then share it back.
Stop sharing, share again. Let me try. Let me try. Yeah, become black here. Why? Wait, wait. I don't know why is this black. Hmm. I'm blank now. Why it is black? Let me just see some other pages. Yeah, why? Sorry, let me. I try to figure out what happened. Um, I'm not sure. I don't know how to. It's still blank. It's just black. Uh, but can you open the document which I have uploaded in Google Classroom?
Can.
Can you open that? Okay, can you open that? I'm not sure what happened, but I don't want to lose more time. But it's still black. I don't know. From my side, actually, there is black background, so I'm not sure why it become a black background here in my document. So can you just go to Google Classroom and upload download the document which I have uploaded just now on this accounting treatment for material rights. Okay. I hope that will be okay for you. Okay. So then I will just try to refer to which slide I will basically will be referring. Okay. So I don't know. You will see still black, but uh, I think you just open your document. Okay. You just open your document, the document from your side. Okay.
Okay, sir.
The first one. Can you refer to your document? Do you get the document already? Any problem?
No, sir. Yes.
No
No
problem.
problem.
Okay.
No problem, sir.
Okay. So you go. There is long document, but I think on page 4. Okay. At the top of page 4. Okay. At the top of page 4, that will be the main summary of how would you treat material rights. Okay. So you see the graph. Can you see the graph?
Yes, sir. Yes, sir.
Okay. Okay. That is how the author have summarized. Okay. So to me, that is a very good summary of the issue related to the material rights. That's why I like to share this graph with all of you. So the first question which you should ask is whether a customer can purchase additional goods or services, okay, or maybe get further discount, okay, whether they can purchase additional goods or services or get further discount or some other benefit without having to enter into the initial contracts. Can a customer purchase the additional good or get further discount or get some other benefit without having to enter into the initial contracts? If your answer is yes, customer can purchase, okay, the additional good or services or get further discount or get some other benefit without having to enter into the initial contracts. So if the answer is yes, there is no issue of material rights. Okay. There is no issue of material right because material right will only arise because customer enter into the initial contracts. Okay. So because of that initial contracts, customer would enjoy, for example, purchase of additional good or services, okay, get a further discount or some other form of benefit because they have entered into the initial contract. That is where material right can arise. If a customer can purchase additional good or services or get a further discount or get some other form of benefit without having to enter into the contract, there is no material rights. So, in order for a material right to arise, okay, it must enter into the initial contract. So if your answer is no, then there is a possibility, okay, because customer cannot get an additional purchase of good or services without entering into the contract. They can only get that when they enter into the initial contract. So if your answer is no, then there is a possibility of having a material rights. But however, of course, you need to answer the second question. Okay, the second question is the price, okay, for example, for additional purchases of goods and services, or whether you will get an additional discount, is the price similar to the standalone price? Okay, which means that if this price, for example, is the same as, for example, other customer who does not have a contract, who does not have any initial contract when they purchase these services, if the price is the same, okay, If the price is the same, there is no different in terms of the benefit which can be derived from the customer who have written the initial contract and the customer who have not written the contract. So if the price is the same between these two customers, then again there is no material right. If the price is the same as the customer who have not written any contract, initial contract, and then again there is no material right. That means first, this must be arise because of the initial contracts. Second, the price will be different, okay, from the standalone price, as if when there is no contract has been written. So for those who get these additional goods, okay, because they might have been entering into the contract, the price also will be different. So if the price is different, then there is an issue of material right, which would require a separate recording, okay, which would require a separate accounting treatment. So this is what a material right is. I'm really very sorry because I'm not sure why I cannot share, but I hope you can refer to the document which I have uploaded. Is that okay for you? Are you clear? That is
Yes.
what we mean by a material right. I think by looking into the example, I hope it will be much more clearer to you to understand issue related to material rights. I have basically in this note, there are 3 examples to illustrate about the material rights. Okay, so you refer to first example. Okay, to the first example. Just refer to your own document with regard to this notes. Okay. Example 1, additional services at discount. Additional services at discount. Okay. So just read the question. Okay, ABC is a provider of network services, and in order to boost its sale, it offered to each customer who signed up for 12-month contract 1 month of free services after 12-month period of the paid services is over. Okay, that's mean for those who have written a 12-month contract, they will get 1 additional month of free services. Okay, so that 1 additional month of a free services is a material right, because it is only offered, okay, it is only offered for the customer who have signed the 12-month contracts. So that is the first question. The second question is the price is similar or different from the normal customer? It's different because they get the additional 1 month free. Okay, 1 month free. The price of a 1 month service under normal circumstances is in IFRS they always use CU lah. Okay, currency unit. This is like ringgit Malaysia. Okay. So the in accounting standard they always use CU, which is a currency unit. Okay. So of course the price is different. A normal customer, if they want a 1 month service of these network services, they need to pay 50 ringgit. But for these customers, since they have write an initial contract of 12 months, they can get 1 month for free. So that 1 month service for free is basically the material rights. Okay. So how should the company account for these contracts? Okay. So as I said, customer would not be able to get this 1 month free without having to sign. So that is the first condition. Second is the price is basically difference. Okay. So you go further on page 5. So that's mean here there are 2 performance obligation for the company. One is the 12 month, okay, network services, which is which they need to provide under the contract. Then is the material right, where then they are required to basically provide 1 month additional network services for free. Okay, so of course if you want to record it in a very simple way, just record the revenue for the 12 month within the contract, because when the company need to basically offer an additional 1 month service for free, then you don't record any revenue because you're giving for free. So that will be a simple way of how you record. You can do that, but whether that is accurate or not, in the accounting treatment, according to IFRS 15, is not accurate, because that 1 month, okay, free network services have been arised because of the initial contract of 12-month network services. So that's why you need to basically estimate the price and allocate it, okay? Allocate the revenue recognition for both performance obligation. So it is not correct to just record revenue for the first 12 months and then not to record any revenue for the 13 month or for the additional month of network service which you give for free for your customer. So that is what you need to do in order to provide a much more appropriate accounting treatment. You need to allocate it between the network service and the material right, which have basically arisen because of initial 12-month contracts. So of course, if you calculate the total price for that 13-month, 12-month initial contract plus 1 month free services, so 13 month, the price is only 600, okay, because 50 ringgit per month, 12 month, that is equivalent to 600. There is no additional, okay, price charged to customer for the 13 month for the additional 1 month free services of network service. So the price for total for the 13 month is 600 ringgit. But of course, you need to basically allocate between the network service and the material rights. So just go a bit below in page 5, where you can see a table, where this table try to allocate that price of 600 ringgit to both network services and the material rights. First, of course, you need to identify what is the price or value of the stand-alone price. For the network service is 600 ringgit. 600 ringgit, 12 month times 50 ringgit, that is equivalent to 600 ringgit. For the material rights, a stand-alone price, if you don't give it for free, okay, the stand-alone price for 1 month is 50 ringgit. Okay, so that is the price for a 1 month network services. That is the stand-alone price, but you are giving it for free because the customer have written the initial 12-month contract. So their stand-alone price, the value of that 1 month network services is equivalent to 50 ringgit. So identify first what are their stand-alone prices. So network services is 600 ringgit. The material right, which is 1 month free network services, is equivalent to 50 ringgit. So total stand-alone price is 650. So based on this, you allocate the transaction prices. Okay, based on the stand-alone selling prices, allocate the actual transaction price, because your actual transaction price is only 600 ringgit because you are giving it for free, okay, for the 13 month. So for network services, so you take the stand-alone price 600 divided by total stand-alone prices, which is 650, and then you multiply by 600 ringgit, because that is the actual price imposed or charged to the customer. So that will be equivalent to 554. So of course, in calculating, okay, in calculating the estimate stand-alone price, you also need to estimate the likelihood the customer will use this additional free service. In this question, we just assume that all the customers who have written the 12-month contracts would take the additional 1 month free in network services. So our assumption of the likelihood is 100%. So inshallah in the next slide, we will use other percentage. But here, we just assume that every customer who have written the 12-month contract will take the additional 1 month network services for free. So the likelihood is 100%. So that's why when we multiply by the charge of fees for 1 month network services, which is 50 ringgit, so we multiply by 100% likelihood. So we get the same figure, which is 50 ringgit. But if the likelihood is only 90%, so the stand-alone selling price for material right will be 50 ringgit multiplied by the percentage of the likelihood the customer will take that 1 month free network services. So if this 90%, only 90%, then you multiply 90% by 50 ringgit. So the stand-alone selling price for material right will only be 45 ringgit. Okay. So this will be the basis for you to allocate the actual 600 ringgit, okay, which has been charged to the customer. Okay. So based on that calculation, okay, so the network service, the price charge is 554 for the additional 1 month. Okay, a material right, that is equivalent to 46 ringgit. So how you get that? You're using the stand-alone price as a basis to allocate the 600 ringgit charge upon the client. So there is some calculation below the table. Okay. So now if we assume that, of course, we basically will bill customer per month. Okay, we will bill customer per month. That means after 1 month, service has been provided to the customer, then you bill your customer. So of course, you will bill your customer at the 50 ringgit. Okay, at 50 ringgit. So you go to the following page on page 6. On page 6 at the top. Okay. So the monthly billing to your customer, you will debit receivable to customer 50 ringgit. Okay, 50 ringgit, because that is the amount the customer need to pay. Okay, need to pay 50 ringgit per month for network services. But when you credit your revenue, you cannot credit, okay, but you cannot credit 50, because you also need to allocate some of your revenue to the last month, which is the 13th month after the completion of the initial contracts. Okay, after the completion of the initial contracts. So that's why you have allocated in the table for the 12 month, the total is only 554. Okay, so the total cannot be 600 because you need to allocate some to the last month, which is the 13th month. Okay, so which is equivalent to 46 ringgit. Okay, so of course you have some issue of decimal point here. I think the author also have put it in bracket there. Okay, apologize for some rounding issues. Okay, but that is what we have allocated. So 554. So when we divided it by 12, so your the revenue which you recognize for a month is only 46.2. Okay, the remaining 3.8, okay, the difference between debit receivable 50 and credit revenue 46.2, the difference of 3.8 is your contract liability. This is related to the material rights. Okay, because you have not provide yet the free 1 month network services. So you need to provide it later after the completion of the 12 month initial contract. So you credit first contract liability. If since your billing is monthly, so this is your monthly journal entry for every month. This will be your entry. Once you reach the last the contract, which is the 12 month from the contracts, So the contract liability which you have recorded 3.8, if you multiply by 12, okay, then that will be equivalent to 46 ringgit, and you will only recognize this as a revenue once you have completing providing an additional month of services, of network services to your customer, which is the 13th month. So once the 13th month is completed, then you will debit contract liability and you will credit revenue, and then it will basically complete the recognition of revenue, which is equivalent to 600 ringgits. So is that clear? Is that clear to you?
Yeah.
Yes,
Yeah.
sir.
Can you repeat again? What is the transaction if they already reached the 13th month?
Uh-huh.
Can you repeat again what is credit, what is debit?
Okay. So the first entry, okay, when you have debit receivable 50, credit revenue from network services 46.2, and then credit contract liability 3.8. This is what you record at the end of every month. Okay, at the end of every month. Okay, that's mean from the first month until the 12th month. Okay, until the 12th month. So because your billing is monthly, this is what you will record. Okay. So once you complete January, for example, then since you have already provided the services of network, providing network services to your customer for the first month, and then you will record the entry, okay, the top one. So end of the second month, you will record again because we record it monthly. Okay, we record our recognition of revenue once we complete every month. Okay, once we have providing the services to the customer, network services to the customer every month, that will be the record. So until the 12th month. Okay, until the 12th month, that will be your entry. Okay, so that is the initial contract, 12 month. Then the material right is to provide the 13 month, okay, network services to your customer. Okay, so once you complete providing network services to your customer for the 13 month, for that additional 1 month, at the end of that month, you will record the next entry, which is debit, contract liability, and then credit revenue. Because you need to record revenue and additional revenue, okay, for the additional month, because the additional month have been arised because of the initial 12-month contracts. Okay, so you record this at the end of 13 month, the second entry. Is that okay?
Yes, thank you.
Uh, are you okay?
Yeah.
Okay, the difference between a much more simpler one, which can also be recorded, but it's not accurate to IFRS 15, is you record debit receivable 50 and then credit revenue from network services 50. So you don't recognize any contract liability. So when you finish 12 months, you already record all the 600. So for the 13 month, you will not record anything because your argument is you are giving the additional month of 1 month network services for free. So there's a logic thinking is there is no revenue because you are basically giving additional 1 month service for free. But that is according to IFRS 15 is not accurate because the additional 1 month service would not be arised if the customer have not returned the initial 12-month contract. So that's why you need to allocate the revenue for all the 13 months, although that the 13 month service is basically given for free, but that only arise because of the initial contract of 12 months. So that's why you need to recognize that contract liability for the for month 13. You only recognize the revenue once you complete provide the service for month 13. Okay. A simpler one is, of course, you only record the revenue up to 12 months. The 13 month, you will not record any revenue because the logic is you're giving it for free, so there is no revenue to be recognized. But according to IFRS 15, that is not accurate. Is that okay, sister?
Yes, sir.
Okay.
Thank you.
Okay. Hope you understand. Sorry, I don't know. I cannot share the document with you on the screen, so you need to refer to your own document. Second example. Okay. Loyalty point. So we have looked into the table from chapter 7 from the books. So customer loyalty. So customer loyalty is also issue related to material rights. Okay. Issue related to material rights. Okay. So a situation to illustrate about customer loyalty, just you have DEF, which is a supermarket chain, issue a loyalty card. Okay. Issue a loyalty card for each purchase of 100 ringgit. I just use 100 ringgit lah, easier rather than currency unit. Okay. For each purchase of 100 ringgit, customer will get 1 point. Okay. Customer will get 1 point. Customer can get a discount of 1 ringgit per 1 point on future purchases. And this is an example of a customer loyalty programs. Okay. So whenever customer purchase certain amount, they will get some point, and this point can basically be used, okay, or can be redeemed later in future purchases. For example, here, if you redeem, you will get 1 point. Okay, 1 point. For 1 point, you will get 1 ringgit discount. Okay, for 1 point you have accumulated, you can basically get 1 ringgit discount. Just some assumption here. Let's say for the year 2000 X1. Okay, let's say at the end of the year, let's say overall you have basically issue 80,000 points. Okay, 80,000 points. You have basically issue 80,000 points. Okay, and the supermarket estimate that overall customer 90% of the customer will use this point for their future purchases. Okay, for their future purchases, an estimate of the likelihood about 90% of the customer will use this point, okay, for their purchases. So here again you have two performance obligation. First, of course, the good which you have sold. Okay, the goods which you have sold. Second is basically the point. The point. This is the material right. This point will not arise if there is no sale. Okay, from the current sales of goods. Okay, sales of goods. Okay, so this material rights. Okay, this point have arise because the customer have do the purchases during the year. So there are two performance obligation. First is the current good which you have sold. The second is the point which you have issued, which can be used and redeemed later in their future purchases, and they will be able to get a discount for 1 point. They will get a discount of 1 ringgit. Okay, so now we need to estimate the stand-alone price. So just simple estimation here. If 80,000 points have been issued and 1 point have been issued from 100 ringgit purchase. So and on average, okay, the transaction which have been occur. So you have the company or the supermarket have issued 80,000 points, okay, and 1 point have been issued from a purchase of 100 ringgit. So in total, the transaction price for the good which have been sold, 80,000 point multiplied by 100 ringgit. So the transaction price is 8 million. Okay, so that is your estimation of the transaction price. So seeing you have issue 80,000 point, so the transaction price is equivalent to 8 million because 1 point issued from this from 100 ringgit purchases. Of course, okay, this is just an estimate. So you might have also a question. Sometimes your purchase might not be exactly 100 ringgit. Okay, might not be exactly 100 ringgit. You might spend 120 ringgit, 110 ringgit, but you will still get 1 point. Okay, 1 point. But this is just a simple estimation. Okay, a simple estimation of the total transaction price, which had been arised because of the issuance of 80,000 points. Okay, 80,000 points. So in terms of that is the estimation of the transaction price. So that is 8 million. Okay. Then we go and estimate the standalone price for the point. So we know that 1 point can be redeemed as 1 ringgit. Okay, as 1 ringgit. So that will be equivalent to 80,000 ringgit. Okay, 80,000 ringgit. However, our estimate of likelihood is only 90% of the customer will exercise this point. So that's why we multiply it by 90%. 90% times 80 ringgit, that is equivalent to 72,000. That will be our estimate on the stand-alone price. Okay, on the stand-alone price for the material. Right, so 8 million for the good which have been sold, 72,000 for the material. Right, so we will use the same formula in calculating how much is the allocated transaction price. The transaction price is 8 million. Now you will allocate between the sale of the good and the material rights of the point. Okay, so we will use the same calculation as before. So you already got the allocated transaction price for the sale of the good. That is 7928642. Okay, and the material right is equivalent to 71358. Okay, so that is the allocated price. So the journal entry is almost the same. Okay, almost the same like before. So of course you debit cash 8 million because you have sold 8 million, but in terms of the revenue from the goods sold, you will not recognize the whole 8 million because from the sale you have a contract liability in the form of the point or loyalty point which have you given for your customer, and they can exercise it in the future purchases. Okay, future purchases to get discount. So you will only recognize, okay, the allocated price for the material right when they exercise the point, okay, the loyalty point in their future purchases. So when they exercise, when the customer use or utilize their point, then only you recognize the remaining revenue. Okay, the remaining revenues. But of course, in practice, you might have some further questions. Sometimes you estimate the likelihood to exercise the point is only 90%, but suddenly more than 90%, exercise the point. Okay, so practical reason, one way of how you can adjust this is to basically adjust the remaining redemption of the point in your new estimate, okay, of the following year, for example. Okay, so you only recognize up to 90%. The remaining, okay, the remaining redemption, you will include it in your future estimate. That might be one way, okay, according to the author. However, if customer redeem less, usually you might also have the period which you can redeem. So you will allow, um, for example, 2 months or 1 month for your future purchases. So once you reach the deadline of 1 or 2 months, might be less than 90%. Okay, so if the time for utilizing the point have been lapsed, then you can basically recognize the remaining contract liability into the revenue. Okay, so that might be some practical solution lah. Yeah, because of course you are dealing with estimate. Sometimes your estimate might not be exact.
Sir, sir, your mic is muted.
Who mute me? Ay, Allahu Akbar. That can happen. I don't know who suddenly it become muted. Okay. It is already long that you cannot hear my voice, or it is just recent.
Just recent.
Yeah, just recent. So I think you can follow that discussion. Okay. So of course, practically you might have some issue lah, because you are dealing with estimate. So sometimes what you have estimated might not actually what happened or what occurred. Okay. So if it is less, then you might decide by certain deadline, then you can recognize all your contract liability into your revenue. If it is more, one practical way as suggested by the author, the excess of that redemption, you will carry forward and try to adjust in the following year estimate of the loyalty points. So that is second example, and the second example is related to customer loyalty. Any question? You okay? Any question from the second example? Any question, brothers, sisters? Can you hear me or I'm muted again?
Yes, no question.
No question, eh? So we go to the last example, okay? To the last example of material rights. So you go further down. Another example of material right is like buy one, get one free, okay? Buy one, get one free, okay? So you will not get an additional goods for free, okay? Okay, if you have not buy the current, okay? If you have not done the current purchases, okay? Might be have some similarities with the first one, but the first one is about network services, okay? This one might be related to a purchase of a good. So when you buy one, you will get one free. For example, here, if you look toward the bottom of page 8, okay, the example we have been given by the author is if you buy a Thailand travel guide, okay, this is a book, okay, it's a book, Thailand travel guide. The price is 50 ringgit, okay. So if you buy that Thailand travel guide, which is the price is 50 ringgit, you are promised to deliver another book, which is Thai cuisine, okay, for free. Okay, so you will get one book free, okay, for free. If you sell this book Thai cuisine, the price is 10 ringgit, okay, 10 ringgit. The cost for this book is 6 ringgit. The cost of Thailand travel guide is 35 ringgit. Okay, 35 ringgit. So under the previous IAS 18 on revenue, you would simply recognize the revenue of both books together, which means that when you sell Thailand travel guide for 50 ringgit, you will give Thai cuisine for free. That means the revenue is 50 ringgit, and the cost of sale is basically the cost of both book, 35 ringgit for travel guide. Cuisine book is 6 ringgit, so the cost is 41 ringgit. So this is under the previous IAS 18 on revenue. Okay, so when you have a transaction with your customer selling this travel guide book, you will recognize a revenue of 50 ringgit, and you will recognize the cost. The cost is actually the cost of both book. Okay, there is no revenue for Thai cuisine because you are giving it for free. Okay, so the revenue is 50 ringgit. The cost is 41 ringgit, which is 35 plus 6. That is under the previous IAS 18. But under IFRS 15, Okay. Under the IR15, you will look into the situation carefully. Okay. So there are two books which you need to basically provide to your customer. Under IFRS 15, if the books are delivered at the same date, like example 7.5, when we have basically discussed about product B and C, if you deliver it at the same date, no problem. Okay? Because the delivery has been done at the same date, so the accounting treatment will be the same as IAS 18. Okay? IAS 18. However, if you deliver the book at two different point of time, and then you need to do an allocation on the relative standalone prices and recognize the revenue accordingly, or I can say separately. Okay, separately, because the delivery of the book happened at the different point of time. For example, here the information given is the book on travel guide, you send it in September. The book on Tiger you basically deliver in October. You cannot deliver it on the same date because you have low stock. So you need to deliver it later. So now you need to do an allocation. Okay, allocation based on the standalone prices. I think by now you should already have clear idea. Standalone prices for travel guide is 50 ringgit. Standalone prices for cuisine is 10 ringgit. So total standalone prices for both goods is 60 ringgit. You only sold it for 50 ringgit because you are giving it for free, the second book. Okay. So you allocate based on the standalone price, multiply by the price you charge, okay, to your customers. So 50. So for travel guide, 50 ringgit divided by 60 times 50 ringgit, that is equivalent to 42. So that 42 ringgit you can recognize as a revenue in September. The price allocated to the second book, since you only deliver it in October, so the 8 ringgit which you deliver in October can only be recognized in October. Okay, so the cost of sale will be recognized accordingly, which means that when you recognize the revenue of 42, then you recognize the cost of the first book. When you recognize the additional revenue of 8 ringgit, then you will recognize the cost of the second book. Okay, so that is how you need to do an allocation. Maybe at the end, the author will say why you need to make yourself complicated. Even the recognition based on IAS 18 is already good, so you just recognize it together. But I think based on IFRS 15, since it is two separate obligation, okay, and you basically deliver it at a different point of time, that would basically affect the accuracy in your recognition of revenue. So you need to allocate the revenue recognition based on what performance obligation which you have basically performed. Okay, so if you already have performed only the first one, then recognize the revenue for the first transaction or for the first performance obligation. So for the second performance obligation, only the recognized revenue when you basically complete, okay, the second performance obligation. So that is basically issues, three examples related to the material rights. So inshallah on Wednesday, I will basically provide you with an additional question. Hopefully that will give you a further understanding with regards to accounting treatment on the material rights. Okay. So I think that is what I have planned for today. Any question you would like to ask? I hope it is clear to you, except for some drawback like the sharing screen is black and sometimes suddenly I have been muted. Okay, muted. So I hope the explanation is clear. Any
Sir,
further question? Any
Sir?
further question? Yeah.
If let's say the customer didn't claim for any additional services, then the journal entry should be just the normal journal entry, right?
If the customer have not
Didn't
claimed,
claim.
okay, so that's why when you look into the first example and the second example, you basically you need to estimate based on your experience. Like, of course, this might be subjective. That's why you need to estimate the likelihood the customer will exercise that. Okay, so that's why in the first question you estimate when it is free, everybody will take it. That's why you make an estimation of 100%. But when it comes into loyalty point, you only use estimate of 90%. So of course, as a company, you might have many customer. Okay, so you do an estimation. Okay, that's why you do an estimation like 90%. Okay. However, of course, for practical reason, that's why at the end of the discussion, sometimes the actual utilization, for example, of the loyalty point might be a bit higher than lower than your estimate. Okay. So that's mean, for example, in your case, might be the example of lower is better, which mean that suddenly you find out that there are more of your customer who have not utilized or used the loyalty point. For example, like only 80%. Okay, only 80%. So when you give this loyalty point, usually, for example, you might also be given, for example, how long for them. Of course, you will not give it forever. For example, how long, okay, you can utilize the loyalty point. 2 months, 3 months, okay, 2 months, 3 months, for example, okay. So once the deadline have been reached, that's mean, which mean that over that time or over that time period which have been given, that loyalty point cannot be used anymore. I will not give that RM1 discount, okay, in your future purchases. Okay, so once that deadline have met, okay, you can actually recognize whatever remaining balance. Okay, for example, only 80% exercise. That means there are still 10% who have not exercised. That means there have been about 10% which you have not recognized as a revenue from your contract liability. Once the deadline have reached, then the balance could also be recognized as a revenue, because by that time the customer cannot utilize anymore the point which have been given to them. Okay, so that's why at the end of the second example, that will be what will be happen in reality lah. For example, like what you asked, okay, they have not exercised. So if they have not exercised, you might need to ask when I can recognize this contract liability as a revenue. So for example, if deadline is given, so when you reach that deadline, then you will transfer all your contract liability to revenue, because by that time the customer cannot utilize it anymore. So whatever revenue which have been deferred now can be recognized as a revenue. Does that answer your question?
Yes, sir. Thank you.
Okay. Any other questions? Any other questions? So hopefully it's clear. Okay, if there is no question, let me just check the chat. Okay, no question. So inshallah on Wednesday, might be you look into your Google Classroom. I will try in the morning, but I don't want to give you too much time actually to do the exercise before the class. So it might be 1 or 2 hours before the class. I might basically upload the questions. Okay, I will upload the question, then you will do it during the class hour. So I will be in the meeting. So if you have any question, you can directly ask the question to me. Okay, so that is what we will do on Wednesday. Okay, so there will be one more session on. Actually, I have allocate 3 session, and my thought at that moment is to give different question. Okay, so that's mean you will not do all the question, but some of your colleague might do a different question. Some of your other colleague might do a different question. Later you can share lah. Okay, later you can share all the question and discuss together. Okay, discuss together all the question which I, inshallah, will provide you. Okay, so I think there is no further question. It's already been silent. Okay,
Sir,
yeah, yep.
for Wednesday, that would be our group project, is it? It will be graded, right?
You need to submit it by the end of the class hour to me.
And it will be graded.
Inshallah. Inshallah,
Okay.
it will be graded. Okay. Yeah, it will be graded.
Okay,
Inshallah, it
thank
will
you,
be
sir.
graded. Okay. 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 So I think that's all. Okay. I think that's all for today. Thank you very much. Okay. Let me end my session today with you. Bye. Assalamualaikum warahmatullahi taala wabarakatuh.
Thank you, sir.
Okay.
Yeah.
Thank you, sir.
Okay, Ustazah.
Thank you.
Yep.
Thank you, sir.
Thank you.